In other news, India's central bank, Reserve Bank of India, has kept the short-term lending rate, also known as the repo rate, unchanged at 6% in its fifth bi-monthly policy review of the fiscal year. 5 of the 6-member Monetary Policy Committee voted in favour of the status quo. The committee had last cut the key lending rate by 25 basis points in August this year. The RBI also maintained its projection for the financial year 18 real growth at 6.7%, saying that the risks are evenly balanced. Today's decision was in line with the consensus estimate. Experts believe that a rise in inflation readings in recent months, rising crude oil prices, recent cuts in GST rates and a risking of fiscal slippage in the ongoing financial year, in addition to the fact that the US Federal Reserve looks all set to hike interest rates in December 12th to the 13th policy review, prevented the central bank from a rate cut. The RBI expects the inflation to stay in the 4.3 to 4.7% bracket in December and March quarters. Meanwhile, market watchers were expecting the RBI not to change the policy tone to be overly hawkish, given that liquidity was already turning tight, yields were hardening and growth dynamics are yet to improve markedly. The RBI's policy statement was much on the expected lines.
We decided to keep the policy repo rate under the liquidity adjustment facility unchanged by a majority of 5-1. It also decided to persevere with a neutral stance of monetary policy and reiterated its commitment to keeping consumer price index inflation at the target of 4% while supporting growth.
Joining me live on the broadcast for more on that story is WION's chief business correspondent, Sumit Chaturvedi. Sumit, so the announcement, of course, along expected lines.
Well, absolutely, Aisha. This was on expected lines, but look at the market, the way it has gone down. Sensex is down by more than 200 points. Clearly, market was expecting something to come because RBI is known to give surprises as well. So here, no surprises came and markets came down. Indian markets, Sensex and Nifty both were down. So main reasons were that only the GDP has improved a lot, because of which the economy seems to be on the normal path, because of which RBI did not feel there is a case for any rate cut. Though out of 6-member MPC committee, 1 member was in favor of giving a 0.25% rate cut, while 5 were in favor of maintaining status quo. So this situation, as far as overall RBI's policy was concerned, it's mainly on the what we're expecting. But big thing is tone. Market experts were expecting RBI's tone to be hawkish. On the other hand, RBI has given a very neutral tone. Well, this sets the overall scenario for the coming few quarters, when RBI will look at things from a different perspective and decide on whether to go for rate cut or not. But it looks like everything is on normal path, and that's why RBI has not gone for a rate cut, any rate cut so far.
But the way the markets are reacting, Sumit, this is clearly an event-based sort of blip, but not something that is expected to continue.
Absolutely. For some more days, maybe 1 to more days, there could be some pressure on RBI or even markets from the RBI side. But thereafter, markets will look for their own equilibrium. They will look for some other factors to watch out for, and they will not be going for this kind of overall. We can say that what they came down today, it was more often absolutely an event triggered that. But going forward, many other factors will be impacting what markets are doing.
All right, Sumit, thanks very much for joining us with that update.